here we go. This is called the S&P or the Nasdaq. I'm sorry. It's a 3-minute chart. We put the bottoms in here, and as we moved up, we paired off a pretty good part of, we spent all day selling down on all indexes today. Right up here from the gap from a couple of days ago, you can see what March 7th was about. And we hit the bottoms and we came up. So when you move up in the Nasdaq, you take the leaders like Google and Apple that have moved well off of their bottoms, and you trade the leadership along with that reversal, and it came late in the day for the bull short cover rally. Here on the Dow 3-minute, we put the bottom in the Dow. Now the Dow early on in the day before that, you can take a look at what March 7th was like, straight down. That's because we called a reversal 2 weeks ago. We're going into the third week today. But when the Dow makes its bottoms, which it did, bam, that's the re-leveraging up. But still, it still paired off a lot of losses. But it's not what we would say, okay, here, there's the bottom now and the correction is over. No. Because if that was the case, you'd be all the way back up here at the top and you'd be breaking those highs, and that didn't happen. On the other hand, I've got a Goldman Sachs that I put a bottom in here with the S&P 500. Short-term trade levered up. Ken Flagg, I came off that S&P down here at that bottom teeny right here. And you can see that we had finally put the bottom in and we started to lever up in the teeny expansion, holding the teeny lines and gradually working our way up. Let us not be fooled, though, on all of these indexes. I never said the correction was over, but what I am saying, the move off the bottom comes every day. However, if it was a real robust short cover move in the S&P 500, well, then you'd be all the way back up here toward the highs of where it all started. So once again, it's about the delta contraction versus the delta expansion, and knowing that that shorter term trade is in there and trading that price action volatility. And we're going in to the last 15 minutes, but all of the indexes keyed well, fared well. As far as a short-term short cover rally where equities finally did find a bottom, but the upside in equities were still a couple, $2 to $3 off that intraday low, but then rolled over again, Beethoven. And what does that mean? They fall back down. And once again, understanding key indexes and the strength and the weakness and the longer term trends will master you the right trade.